Hi everybody, this is Alan Ellman, the Blue Collar Investor, and I'm producing this video to tell you about my fourth book, Stock Investing for Students. This is the book that I've always wanted to write. For the past decade, I've been writing and speaking about covered call writing, a strategy that has worked very well for me and my family. I started using this strategy as a middle-aged adult, basically to play catch-up, because I had never invested prior to that. The reason I never invested prior to that is that I was never educated to do so. I always felt that there was a hole in the fabric of a financial education system that didn't teach financial literacy to me, my peers, and now to your children, and to those youths who are watching this video. That's the reason I've always wanted to write this book. About a year and a half ago, I picked up a pen and started writing. And now today, that book is available, and I'm very excited about that. So let me tell you a little bit about the book and how we set up a plan for achieving financial security and an early retirement. And I'm going to refer from time to time to a paper that I have in front of me because I want to make sure that I don't leave anything out in this video. So let me start off by telling you that the goals of this book are twofold. First, to educate our youth in investing in the stock market. And the reason I selected the stock market, because that's the asset class that historically has had the greatest returns. The second goal is to set up a user-friendly plan, and that's important, the user-friendly part, where any student can start investing at a relatively young age and ultimately achieve financial independence. So those are the two goals of the book. Now, based on this plan, I use certain sound and proven fundamental techniques that have been historically shown to be effective. Certain techniques as dollar cost averaging, as dividend reinvestment, as compounding your money, taking your profits and reinvesting them, and cash allocation. So these are the principles that I use. Basically, it's not rocket science. And as you'll see as we go through this video, the plan is very, very user-friendly, easy to use. So let me tell you about the assumptions that I make in this book with the caveat that you can actually adjust those assumptions based on your specific situation. So here's that list now. First of all, what we're going to do is we're going to invest 10% of our gross annual income each year. So if you make $50,000, you're going to invest $5,000. And you're going to take that $5,000 and invest it in equal increments every month. So 1/12 of $5,000 will be invested each month. Now, we're going to start at the age of 18, and again, that can be adjusted. Some of you may be able to start younger. Many of you have already passed the age of 18. Maybe you're 21, and you're going to start at age 21. So this can be adjusted, and I will show you in the book how you could take a savings calculator and figure out how much you'll have at the end of the 40-year plan, or you can adjust the plan down in terms of years depending on when you'd like to retire. Now, the average gross income, the assumption we're going to make is that you're going to average $60,000 over the first 20 years and $80,000 over the second 20 years. And remember, we're taking 10% of that and dividing it into 12 equal monthly investment increments. Now, we're going to start off by investing in broad market mutual index funds. Now, we're going to select mutual funds that have very low cost ratios or very low expenses. This could be set up with your brokerage such that money is automatically withdrawn from your checking account and shares are purchased every single month based on the amount that you tell them and at the date that you tell them. For example, you may say, take $1,000 out of my checking account to purchase $1,000 worth of shares on the first of every month. So it's automated, therefore very user-friendly. Now, once your account has achieved $25,000 in value, then you could branch off into individual stocks, which will generate even higher returns. And we're going to talk about an online screener which will help you select the stocks based on some sound fundamental, technical, and common sense principles that the book will detail. So, what about when a position starts turning against us? Well, we'll also be able to automate that, where we'll be able to exit a position when it's declined in value by 10% from its highest price. And that'll be explained in the book as well. So that aspect of it, exiting your positions, will also be automated. As you could see, one of my goals was to make this plan very user-friendly. Now, we talked about the online stock screener. We're going to give you certain fundamental, technical, and common sense parameters to feed into that screener, where we know the stocks that are ultimately generated from that screener will be of the highest quality and eligible for our wealth building portfolios. And once a year, we're going to rebalance our portfolio so that if one position has a lot more money in it than the others, we'll be able to take some of that cash and move it into the other positions, so each position will have approximately the same amount of cash allocated to it. So as far as automation is concerned, the selection of our mutual funds, once we've selected it, we don't have to think about our wealth building portfolio for a couple of years until we've built up a portfolio worth $25,000. Then we move into stocks, and the selection of the stocks will be automated based on the parameters we feed into the screener, and exiting positions will also be automated based on the 10% rule. That'll all be explained in the book. So again, I like to say, my dream is for this book to be in as many high schools and colleges, not only throughout the United States, but as many countries as possible, to help elevate the financial literacy of our youth. There is no rocket science here, folks. This is a user-friendly plan based on sound fundamental, technical, and common sense principles. Thank you for listening to this video. I hope you or a loved one, a friend or a relative, will ultimately benefit from this book. Thanks again, and as always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.